Well, a very interesting note coming in from Wood of Jefferies. In his Greed and Fear note that he publishes on a weekly basis, he's written quite in depth about a lot of interesting topics. Most importantly, he writes in depth about the oil prices. He's saying that at this point of time, it appears as though oil prices could continue its upward trajectory. He speaks about demand, he speaks about supply, he also speaks about inflation, and he also writes about the kind of pair trading strategies that investors should adopt. Remember, Chris Wood has been a proponent of the long cyclical trade for quite some time, and in fact was amongst the earliest to identify this particular trade as being quite fruitful to investors. His trade has played out quite significantly, and he continues to hold on to this particular thought process and investment strategy for the time being at least. Let's see what he has to say as far as inflation is concerned and oil prices. Greed and Fear continues to have and now has a positive view as far as oil prices are concerned. He's saying that oil is likely to act as a catalyst for an escalation of the inflation scare. He also says oil at this point of time will react positively, number one, to the positive demand scenario that is playing out across the world, and there is a booming demand for oil products. And he also says that there is a growing lack of supply as far as oil supply and oil production is concerned on the back of cuts being seen across oil producing countries. He's also saying that the demand side is definitely coming back very strongly and should soon rebound to a record. He says that the world crude oil demand has already risen from 82.9 million barrels per day to almost 93.1 million barrels per day from second quarter 2020 to first quarter 2021. He's saying that the inflation is accelerating in America, partly due to the base effect. So while he is saying inflation at this point of time seems optically higher due to the much lower base effect, it is a fact that inflation is trending much higher across the globe, including America, due to the various spending, various Fed easing policies, easy monetary policies across the globe. And this is one of the offshoots, or this is one of the cautions that need to be taken every time that there is easy monetary policy. He also says that the Greed and Fear will continue to look at inflation by looking and will track inflation by looking at the year-on-year change as far as inflation rates in the US is concerned. He's saying investors at this point of time should continue to hold on to the cyclical trade, and according to Chris Wood, the best cyclical trade at this point of time is to go long as far as energy stocks are concerned and to go short on profitless tech thematic stocks. So most of the fancy tech stocks, he believes at this point of time, which are not making a profit, could provide a good shorting opportunity as far as traders are concerned.